Ma'am, my first question to you: how badly has COVID affected the Indian economy? What are some of the long term and short term problems caused by it?
Yeah, as you said, this is a pandemic, a global, problem which comes once in 100 years. So we must expect it to impact us badly. And especially India had a lot of vulnerabilities because of the size of the country, because of the poverty, the congestion. So, given all that, I think we have managed pretty well. Our in per capita terms, our numbers of infection, death rates, and so on are very, very low. Though, if you look at the absolute numbers, it looks very high because of our population size.
Yes.
Short term, very large economic costs from the lockdown. But so in Q1 of this year, we saw growth plunge more than 20%. But this is a short-term cost, and I don't think it will persist in the long run because of the lot of policy measures taken, particularly from the Reserve Bank, that have helped, and the government, the credit warranties, which have helped firms survive. So we are still in the middle of this, so we don't know. There are uncertainties. But I think the numbers on restructuring, if you talk to banks, initial analyst estimates of NPAs and problems for firms were very, very large. But it seems that firms have actually done much better in terms of profit. They've had cost cutting, and people in general are repaying. So NPA is also expected to be much lower than originally expected. Banks have acquired equity cushions and they're comfortable. So I think because of this, the persistence comes if firms die, if people lose jobs and then they don't come back into the job market. So otherwise, endogenous growth theories tell us that if there is a natural disaster like an earthquake or a fire or something which destroys capital, physical capital, but human capital is intact, then there's a very sharp recovery. Yes. Because people are there and they want to make up for the shock. And I think as Indians, we are resilient. So this may be one explanation for why we are outperforming analysts' expectations. Mm-hmm. We've done better in Q2, and in general, most parameters we seem to be doing okay. So there's signs of a turnaround already. And COVID itself, I think we managed very well because we avoided that second peak. And in June, there was an economic recovery when the lockdown was lifted. But then it started because of migrants, reverse migration, it spread. That's a problem of a large country and a democracy. You can't keep people in place. So it spread all over the country. Then states started imposing local lockdowns, which had a large economic cost. But I think what really helped us, say, compared to the UK and US and Europe, which we're doing very badly in terms of second multiple peaks, is the gradual unlock. We didn't all of a sudden open everything.
True.
And large gatherings, places where there are large gatherings were the last in order of priority, because those are the biggest spreaders, super spreaders, so to speak. And use of masks, etc., was encouraged. And then the unlock 4 in early September, Center specifically said states are advised again imposing arbitrary restrictions on interstate movement, because that was really disrupting supply chains. So after that was mitigated, then we saw a gradual recovery. After September, we've seen industry and doing much better. I think the supply chain disruptions are also reducing. They're coming back to normal almost. And of course, some industries are badly affected, hospitality, travel, etc. But there also you see substitution, partly because we don't have those large rescue packages that you have in the West. People here are very, innovative. They see what the market, where there are opportunities, and they go there. So we are seeing that substitution both by consumers and by producers. So as long as the people are intact, our death rate has been low, thank goodness. And they are resilient, and they will fight back, and they're doing it already.
Yes, because if private investment down, we can say consumption can drive the Indian economy in next 2 quarters. Hoping
So
for
even
positive.
private investment, we are seeing because a lot of consumers were saving the better off. Even firms are deleveraging. So they're cash rich. There were tax
Yes,
cuts. And now a lot of cement industries, apparently they started investment. L&T had a big, so we are
and
seeing
then
a revival of private investment also. Because there's a large increase in consumption of electronic goods and other online shopping, etc.
yes,
And my own theory is one, apart from resilience, another reason is that we were going through a credit drought in the economy, since 2017. Because
yes,
demonetization withdrew a lot of cash from the economy. But after that, you had in 2018, you had US Fed rates going up and outflows. And because of that, there was aggregate liquidity tightening. Then ILFS collapsed and there was no liquidity window provided. So aggregate as well as sectoral liquidity tightening. When already there's a problem of low cash in the economy. So all this coming one on top of the other, very tight liquidity.
and
You talk to people on the ground, they would say, we've never seen the economy like this. There's no money. Nobody wants to. You saw a sharp fall in consumer credit and growth fell. So
yes,
people say that continuous fall in growth since 2017, but that's not true. Because in mid 2019, when the regime changed in RBI, the liquidity was loosened. And by February 2020, if you look at high frequency data, there was a turnaround. Growth had picked up. But in March, COVID hit. So for the quarter as a whole, it looked as if growth is continuously falling. For the
falling.
year as a whole, growth came in only at 4%. But there
Yes,
was a turnaround, and it was due to the relaxation in the liquidity constraints. And what COVID has done is there is an enhancement of the liquidity, the measures
yes,
taken by our
yes,
government. So that is
true.
reversing this long term kind of liquidity squeeze that was hurting the economy. And I think that is another reason why we are seeing a faster than expected growth.
Fast. That's true.